Okay, folks, welcome. This is Andy Pedraza with Special Effects Academy on the start of the week session for July 15th, 2018. Going to take a look at the results of the week that just ended, as well as our initial analysis and outlook for the week to come. And the rest of the stuff we normally look at, the currency meter, the fundamentals for the week, and this, that, and the other. Our contents as usual, we're going to look at the prior week. We're going to look at the currency strength meter, the calendar of fundamental announcements, our major pairs analysis, any setups we see in progress right now, and a few parting words as well as our usual Q&A at the end. We'll start with the results from last week. So we are presenting two ledgers now as our end of the week results, the long term and the short term, just for everybody's edification as well as for our record keeping. So what you're seeing on the screen right now is the long-term account. It actually started off the quarter with a bang. We had already been doing well as of the end of June. There were 5 trades that have been closed so far in the month of July, so that's the beginning of the new quarter. Combined, they gave us a little bit more than 450 pips of profit. The more surprising part of that is that most of these trades were opened in the last 2 weeks. So despite this being the long-term account, some of these trades actually turned into short-term opportunities for quite a nice little uptick. So this account is looking extremely healthy right now. We are only carrying one open trade right now, which is essentially at break even, and that is the Euro Pound long that has been open since the 11th of May. So long as it doesn't drift into terribly negative territory, and especially taking into account the profit that we've already captured so far in excess of 1,600 pips since April, I'm inclined to let that one run. So that will remain on the books until further notice, and those are the results of the long term. We'll probably be opening up a few more long-term trades this week, either continuations of the one that we closed simply because we wanted to capture that chunk of profit. They moved too quickly for my taste. I prefer my long-term trades to move gradually and not spike. When they do spike, I tend to take profit off the table rather quickly because you will usually see a retracement to follow, even if ultimately the direction continues in the expected direction. Okay, so that's it for the long-term ledger. Moving on to the short-term, and this is our weekly account that we actively trade in the trading room. It was a mixed week. We had 4 losing trades out of 10, so a 60% win ratio. The results were not spectacular, but they were positive. We captured and adjusted 77 pips of profit. So the long-term account actually outdid the short-term one in the same short-term period. Doesn't happen often, but it does happen. But anyway, for the week, we did capture a profit of 2.94%, so a little bit shy of a 3% gain on the account for the second week of July. And that's about all I can say for the ledgers. If anybody has any questions, well, you do have access to these ledgers 24/7. The link is in every single email we send out, so you can always take a look there. But if you have any questions on anything, by all means, do let me know. Opportunities for short-term improvement. The short-term outlook is still very choppy. We've seen the different pairs go up and go down just 1 week to the next. The euro strong, then the euro's weak, the dollar strong, then the dollar's weak. So we will be trading very carefully until we see a longer-term trend establishing itself. But anyway, last week was a positive week, and any positive week is a good week. On the long term, they are faring much better, as I pointed out, as they usually will do. we'll be piggybacking on the longer term signals for safer trades, even though the initial risk tends to be greater. For those of us that have been following us for a while, you know that my long-term trades tend to be 200 pip stops or above. So that may be a little bit of a daunting risk when the trade opens. If that's too high for your taste, I would suggest trading at lower lot sizes. But my record in long-term trades is above 90% right now. That is impressive even for me. I'm usually around 70% for the long-term trades. It's been a good year. Not sure how long that's going to last, but the longer-term trades do tend to be safer in the long run, even if the initial risk is going to be a little bit frightening for those not used to trading longer term. It is counterintuitive, but the long-term signals do tend to outperform anything you can do on the short term. Last but not least, trades remaining open on the short-term account over the weekend, none. We closed out every single trade that we opened. With that, we move on to the relative strength meter, the major currencies. So on the left-hand side of the screen, you see the week immediately prior, the week that ended July 6th. And on the right-hand side, you see last week. So what we can see from last week is that the Aussie continued to outperform. We're on 2 weeks now of the Aussie outperforming most of the other currencies. The CAD did a little bit of a recovery, but not much. Not as bottom of the pack as it was 2 weeks ago, but still it did not have a spectacular week. The Swiss continued to trail near the bottom, so the Swiss has been losing a lot of ground in the last 2 weeks. And we'll be looking at the USD Swiss chart in particular to see if we have a good longer-term opportunity, though it is very close to one of the major points of resistance. So not sure it's going to continue going up, but if it does, we will be there to take advantage of it. The euro also continued to have a lackluster week, especially against the dollar, and in this case, the Aussie. It did appreciate against all the other currencies, but again, its main contender is always going to be the dollar, and in this case, it has failed to gain any ground. The pound also underperformed against the dollar, against the euro, against the CAD, so against the major currencies. It underperformed. The JPY was the clear loser for the week and is now going on 2 weeks running of weakness. JPY was bottom of the pack. The New Zealand had a middle of the pack week. It got stronger against some, weaker against others. The dollar was the clear winner, outperformed every other currency out there. And at the end, we have our little bullets for silver and gold, which I like to keep tabs on just to see what the general economy outside currencies is doing at any given time. So we see that silver is also underperforming, and gold as well against the major currencies. It's only gaining against the Swiss and the yen. It did underperform the euro, the pound, and of course the US dollar. Okay, well, with that being said, we're
Can I
going
ask
to
you a quick question?
Absolutely. Do I need to go back?
No. Do you have any inclination why the JPY is so weak right now?
The JPY is basically weak on the fears of the trade war that's brewing. So the powers that be, or the market in general, are thinking that the yen is going to suffer more than the other currencies. So most of the movement you've seen in the market in the last couple of weeks, I'm going to say that 70% or more of the movement has been based on the fears of an escalation of the trade war between China and the U.S., and also between the U.S. and pretty much everybody else. If you've been following the news, Trump just today or late yesterday actually labeled the European Union as a foe. He said they were a foe to our trade. That's the first time we've ever considered the European enemies in any situation since probably World War II. So obviously tensions are getting higher, and that is affecting the market. So really that's the easiest explanation. There's a few other factors in there, but that is going to be the main one.
But wouldn't that make the JP, I mean, don't people run to the JPY when something bad is happening with US? I don't really understand why US is getting stronger and JPY isn't if there's that much uncertainty. I mean, I know we can't go into a big long thing, but
no, quite the opposite. The dollar is not getting weaker. I think the market is assuming that that Trump is actually having a pretty good run, and he's managing to come out ahead in everything where people said he was going to fail. Said he wasn't going to get anywhere with the North Koreans. Well, for the first time in I don't know how long, actually in forever, a U.S. president sat down with a North Korean president and actually came out with a pretty decent agreement. Have to see if it's fulfilled or not, but so far it's looking good. The trade wars, yes, indeed, all the naysayers here in America are saying that it's going to be terrible for the U.S., but I guess the big businesses disagree, as does the market right now. So the dollar is getting stronger, and that means the yen is going to get weaker until that equation changes or shifts.
all right, thanks.
Yeah, it doesn't have to make sense, or at least doesn't have to make sense to us. It's what the market is perceiving that's going to move the relative prices of the currency. So I agree with you. I would have thought, and I've been banking on dollar weakness as well as a stock market crash for quite a while. But that's my gut feeling. My trading has been in the direction of dollar strength because that's what the market's doing. Okay, moving on to the calendar of events for the coming week. We are starting on Monday with a very high level event happening, which is the meeting between President Trump and President Putin of Russia. That's going to be the main driver. And of course, this is not a fundamental in the sense that there will be an announcement and it's going to be 5.2 and that's what the market, no, this is going to be an ongoing roller coaster as little bullets of talking points get filtered out to the media. So it's going to be an interesting day for the dollar. All the other announcements coming out on Monday are going to be duds in comparison. If there is any breaking news out of that US-Russia summit, that is indeed going to move the dollar in one direction or another. No way to predict, so we'll be eagerly listening to the news for most of the day and seeing what opportunities we can find. The meeting does start at 9 a.m. Eastern Daylight Time, and we'll be following that closely, and I'll give you guys updates as often as I get them. We do have the Reserve Bank of Australia's meeting minutes at 8:30 p.m. as well. Not sure what's expected from that. It's the general outlook on their economy, and it is considered a high-impact event, but I will likely not be trading it too closely. I'll be keeping an eye on what the Aussie is doing, but I won't be paying attention to the actual minutes other than giving them a cursory reading once I get the link. On Tuesday morning, we have the average earnings out of the UK, 3-month and yearly at very early in the morning, 4:30 a.m. I will likely not be trading that one live either. That just interrupts my sleep patterns. I'm sorry. Wednesday at the same early hour, we have the CPI coming out of the UK, coming out of the Euro. And later on in the day, in the evening, we have the employment numbers coming out of Australia. Those I will very likely be trading live since it's at a decent hour. It's going to be 9:30 p.m. my time. They don't usually move the needle much, but the Aussie has been having a roller coaster for the last, I'm going to say 6 months. So anything has the potential to move the needle. So that one I will be opening up the trading room live for the employment numbers. And we do have a second page continuation. So again, still employment numbers out of the Australia at the same time. So that's 4 different announcements that they're making. And last but not least, on Friday morning, we have retail sales and the CPI coming out of Canada. That also doesn't tend to move the needle much, so I will be skipping that one. So the only one I plan on trading live and opening up the trading room will be on Thursday for the Wednesday. Wednesday, July 18th at 9:30 p.m. Eastern Daylight Time for the Australian employment numbers. And with that, we will move on to our charts, starting out with the euro dollar as we usually do. These are going to be daily charts to look at the general direction that the market is taking. We see that the euro dollar has been in free fall for a while since April. It's pretty much made a new low and has tested that low multiple times. It has also tried to do reversals, which have all failed, including the most recent one. And it looks to be more dollar strength expected in the market. So I will be trading the euro dollar down most likely as soon as I see a good opportunity. Again, it doesn't need to make a whole lot of sense from a common sense point of view. I do agree with the general sentiment that the dollar has no business being as strong as it has been going for the past months. But there you have it. That is what the market is doing. And as traders, we trade what the charts tell us, not what we think. So it'll be a dollar strength week unless something fundamentally changes as a result of that Trump-Putin meeting that will start tomorrow. Moving on to the pound dollar, we see exactly the same situation, a complete collapse of the pound, dollar strength all across the board. Little intense of retracement, which quickly fail. A test of the prior low. It hasn't actually made a new low, but it has tested the prior low. And of course, we have the UK in absolute political chaos right now. First off, with Trump's visit, it looks like he, I'm not going to go as far as to say insulted, but certainly embarrassed the UK government by calling into question their Brexit plans, as well as the most recent comments regarding considering Europe in general as a foe to the US when it comes to trading. So to be quite honest, the UK's government, Prime Minister Theresa May's government, is this close to having a vote of no confidence in being ousted out of power, which would likely bring Labour into the picture, which is going to be scary for business all around. But all that political turmoil, plus the possibility of Labour, the head of Labour, whose name is Jeremy Corbyn, he is very much left-wing, very anti-business, very anti-money. So if Labour does get in and there is a Labour government, the pound is going to collapse even further. We may see it go to lows that we haven't seen since the aftermath of the Brexit vote. Of course, all that is going to be temporary. At some point, the pound will recover and it'll come back to where it was, but that doesn't matter. What matters to us is that we can pick the direction and ride it for as long as it goes. We'll make money as the pound goes down. We'll make money again as the pound goes up, same as we did right after Brexit. So stay tuned for that one. If we do have a political upset coming out of the UK, this is going to be the pair to trade, as well as the pound JPY, for the obvious reasons that when the Europeans, including the Brits, get scared, the money starts flowing into the yen. So we will see that play out if the situation doesn't improve in the UK.
But overall, the pound really hasn't done much either way since all that came out. I mean, what I'm looking at is since April, the middle of April, it started free falling. And then I'm surprised that something like that didn't have to happen after May.
It didn't have that much further to fall, and this is where your support and resistance are going to become very important. Let me flip back to that chart. We already have a major point of support back here at the 130.5, so 130.50 or thereabouts, which is where all this bouncing back in September took place. So we see all that bouncing there. It strengthened incredibly against the dollar and then collapsed in about half the time it took it to climb all the way up there. It is not going to breach that level of support unless something really, really big happens. And that big thing that might happen is the collapse of May's government. Until that happens, you'll likely see that 130.50 is going to hold. So these moves are actually really big. On the daily, they look small. Obviously, this is a giant move. But even these moves are moving the needle by 200 pips at a time. And that is significant. 2 cents on the exchange rate is pretty significant for the pound dollar. We saw the utter collapse of the pound on Friday with all the news of the resignations. And then it quickly bounced back towards the top of the range as the day wound down. Since Friday, I think 5 or 6 more ministers have resigned. So there should be, I haven't even looked at the charts today other than doing the dailies, but there is likely a big, big gap on the pound dollar right now. I'll go take a look at it later because I just haven't had the inclination. But trust me, these moves are big, even though in this chart they look very small. That pound is going to go down unless something improves in the UK pretty quickly. Moving on to the USDJPY, and the USDJPY honestly is puzzling me because with all the turmoil in Europe, it should be getting stronger as the money pours out. So again, the trade wars are the only possible thing that could be souring people on the yen right now. It's going to be assumed that Japan is going to be harder hit than other geographies. That's the only explanation for the pound continuing to weaken, not just against the dollar, but against pretty much everybody else, as we'll see in the other JPY charts. But regardless of that, we are seeing a new high on the USDJPY. I have traded it up on the long-term account and took some profit off the picture last week. I will likely be reopening that trade once I see it establish direction again. It has at least 200 to 300 more pips to give us on its way up. And of course, we'll be careful. We'll be putting our stops in a safe position as we can. But this one for now is has only one direction, and that direction is up. So again, we'll take a look at what the weekly open does in the first few hours, but my inclination is to go long on the USDJPY. USD Canadian, the Canadian continues weakening against the dollar while making big retracements along the way. So it does like to retrace and then head back in the same direction. We cleared a nice chunk of pips last week on the aftermath of the fundamental announcement. So that was a key trade, which after we took our profit, it promptly collapsed again and is now resting on that trend line from the daily. So this is another one to keep a close eye on. I think it will still continue trending up, especially so long as the dollar continues gaining in strength. But this is not the easiest pair to trade. So this is one where we have to be very careful simply because of the wild swinging it does, even when it's heading in one direction. USD Swiss, and I promised I'd be mentioning this one or lingering on it a little bit more than I usually do. It is at that major point of resistance support indicated by parity, where 1 US dollar is equal to 1 Swiss franc. Currently trading a little bit above. We can see that that is the natural stopping point for quite a while. Indeed, it was higher early in 2017, but since then has not tried to breach the all-time high of 103. This may be that opportunity for it to give it a run for another 300 pips up. And this is why I'm going to be closely watching this pair as the week continues to evolve, as well as all the news coming out of the U.S. and all the global events that have to do with the U.S. So this is a key pair. If I can trade it up for 300 pips, I'll be very happy to do so. But more importantly, eventually all these moves fail, and it tends to go back to around the 95 area down here. This is another natural stopping point. So it will give us an opportunity to trade it all the way down for at least 500 pips once it starts moving again in that direction. I don't care which way it moves. All I care is that it moves, so I'll be keeping a close eye on it. Aussie dollar, not much I can say about the Aussie dollar. It's been just punished again and again and again since the beginning of the year, where it made a high of 81 and change. Currently trading about 700 pips below that. Recently retraced over a significant low and is now hanging out in the middle, still following that trend line on its way down. Now forming a wedge with that low, so we'll see which way it breaks. This is one that I've been eagerly waiting for the opportunity to trade it up, and it just has not happened. It's not natural for it to stay down there this long. So eventually we'll get that opportunity to trade it up, but it will be when we get the signal. We will not be trying to anticipate this one.
All right. Can I ask you a quick question again?
Absolutely.
All right. So this one is towards the bottom and you're waiting to trade it up. The USD Swiss is at the top, a natural top, and you're waiting to trade that one up. So why wouldn't you be doing the same thing with this one, looking to trade it down compared to the Swiss?
Because of fundamentals. The Swiss franc and the Aussie dollar are two completely different animals. Their economies are different. So I do make some of my fundamental knowledge about the different countries and the different currencies when I make the decisions. Now, bear in mind, I never said that I was actually going to do that. That is my gut feeling.
Right.
But I said right at the top, I do not trade my gut feeling. If this thing starts going down, I'm going to trade it down. But my gut feeling is that we will have a good opportunity at some point to trade it back up, and I'm going to be waiting for that.
Okay, thanks.
No worries. Moving on to the New Zealand dollar, I'm not even going to linger on this one. It's doing, it is a copy of the Australian dollar. So same reasoning. I do expect at some point for us to get an opportunity to trade it back up. But for now, it is heading down. Not sure where it will establish a bottom. I'll happily trade it in either direction, getting the right signals. But again, my gut feeling is that before the end of the year, we're going to have a nice opportunity to trade it back up for about 700 pips, same as the Aussie dollar. So again, you have to mix some of the fundamentals of the different geographies as well as the technical analysis. One without the other, you're going to be a little bit unbalanced. Technicals often stronger, but fundamentals can affect the technicals very strongly as well. So a little bit of a wishy-washy way of seeing it, but that is the reality. If you learn to balance the two properly, you're going to have a lot more success. That takes us away from the USD pairs, and we now move into the Aussie Canadian. Nothing new here. The Aussie was pummeled since January, and we see that playing out with the Canadian. And then the Canadian had its own issues. So we see that retracement, then another drop into Aussie weakness, then more retracements, and so on. It is still heading towards the bottom. It's got a nice bit of room to move till it tests the very bottom of the chart. And indeed, if we see any sign of Canadian strength, if we see any sign of Canadian strength, this one will be a very good opportunity to pick up 200 to 300 pips on a test of the bottom. But again, we'll wait for the signal we do not anticipate. Euro Swiss, one of our long-term trades that played out quite well over the last couple of weeks. So we did trade it up for a significant degree. It has now breached several levels of support resistance. It's got significant room towards the top, about 300 pips worth of room. And I'll be keeping a close eye on it for the weeks to come to see if the Swiss has enough weakness in it, as it may have against the dollar, to move it up as far as the prior high. The prior high for the Euro Swiss is much closer than that high that we see on the dollar, which is more than a year ago. With the dollars, with the Euro Swiss, it happened only last March. So this is a very easy high for it to attempt to test. So another one that goes high on my radar for the week. Euro pound, this is going to be the pair I'm going to be ignoring the most. The euro is in trouble, the pound is in trouble. It's a coin toss to see which one is in more trouble than the other, or which will be in more trouble than the other in any given week. So very news driven, but you can see the almost perfect sideways action. That's because they tend to get stronger at the same time or weaker at the same time. And Euro pound has not been able to consistently break out of the range it's trading. Right now it is bullish. It's broken out of the downward channel, but again has not done anything too significant. It could very easily go back into the channel at a moment's notice, especially with the political unrest in the UK. So probably going to be ignoring this one. I'll take a look at it every now and then, but I have really low expectations for any signals coming out of the Euro pound. EURJPY, and we hinted at this before, that JPY has been weakening against every other currency, including the euro, for the last few weeks. This is just the same thing playing out. It has broken out of a very sloppy channel. That's a channel that's been broken more often than not. It still tends to return to it, so I like the channel, but I wouldn't consider this break to be very significant, since it does tend to go outside the channel for extended periods before coming back. If I see an opportunity to trade this one higher, I probably will. The general, I guess, feeling I'm getting out of the market right now is that we're in for yen weakness until further notice. So this may be another pair that we trade, and it does have extreme room towards the top to the prior high, 600 to 700 pips of room to grow. So another one I'll be keeping actually, I'm going to be keeping a close eye on all the euro pairs, but EURJPY and Euro Swiss are certainly among my top contenders. Euro Canadian, on the other hand, is not. So with the Euro Canadian, we have two currencies weakening. And again, it's a coin toss to see which one weakens more than the other. We saw the Canadian weakening all the way from September through February, and then regaining strength, never quite reaching the prior bottom. Retracing, moving sideways, not a whole lot of opportunity. Short-term opportunities we may see, and we'll trade it for 50, 25, 30, whatever pips. But long-term, I'm just not seeing the consistency. Pound JPY, again, JPY weakening even against the pound, which has been hammered throughout this same period. So it's incredible to see that no matter how big the pound weakness happened to be, the yen managed to weaken even more than the pound. It is clearing levels of resistance. It's broken out of the channel. If I wasn't so nervous with the political unrest in the UK, I would already be long on this pair long term. But that is not the right way to do it. Anything, literally anything can happen out of the UK in this coming week. So I'll be paying close attention to the news and seeing if we can grab some quick pips, maybe even a long-term trade, but not because I enter a long-term trade, but because a short-term trade moves so aggressively that I start moving stops and limits. And we may end up on a nice little ride all the way to the top, but I would not count on it. AUDUSD another one that I will be ignoring, even though we see the JPY weakness, even against the Aussie all in all, a very sideways chart since sometime in February. So really has established an upper and lower boundary at the 84.30 something and the 80.50, and it has been consistently bouncing between those two. I may go in at the top, trading it back out and back down the channel, or of course trade a breakout, but for now I'm going to let that one evolve. Euro New Zealand, another sideways pair, but with a nice wide range, a range of about 600 pips, which it is now at the top of that range. So if anything, we may be in for a trip back towards the bottom. If I see that playing out, I will definitely get into that trade. If I see it heading up, I may take a breather on that one. It's very near its recent high. And again, I'll have to take a look at what the charts as well as the fundamentals are telling me at the time. But I'd be more inclined to believe in a trip back across the channel than for this to get significantly higher than it already is. And pound Canadian, again, week against week. I'm not going to even try to trade that one. It has been trading in both directions and more recently very sideways. So getting into a wedge, if it does break out of that wedge with any consistency, I'll probably trade it. But that is probably 2 to 3 weeks away before it gets even close to the apex of the wedge. And that is it for the charts. Is there any chart in particular anybody wants me to go back to, or any questions on the charts themselves? Okay, then here are some crib notes I made while taking a look at the charts before this meeting. So the setups I see in progress, of course, the USD continues its bull run, completely unexpectedly and surprising, but it shows no sign of stopping. That's dangerous because when it stops, it will probably reverse with a vengeance, but it's also very profitable under the right conditions and precautions. So we will be trading dollar strength for as long as the market continues to deliver that to us, but I'm going to be very, very careful on all of those trades. The euro pairs, they're bouncing. Opportunities may be had, especially against JPY and the Swiss, which seem to be weakening quicker than the euro. Be careful with the euro, but if you pick the right pair, you may indeed get some good profit. The pound pairs, after a disastrous for the UK visit by President Trump, again, he insulted them, he embarrassed them, he did everything other than demand war reparations for 1812. We do expect the pound to continue collapsing. It is at a major point of resistance, however, so it's going to take support, I'm sorry. It's going to take some major events like further resignations from government officials or even a vote of no confidence, but it's very easy for anything to push it past the support, and then it's going to be in free fall for a while. So as I mentioned, you have ministers, key ministers have been resigning. I think 8 of them so far and counting, including some very important ministers, the ones in charge of Brexit, and the one in charge of foreign relations. So this could easily turn into that vote of no confidence for Prime Minister May. So we'll have to factor that in, trade it very carefully, but very much trade the news. If I see anything happening, I'm going to jump in with both feet on shorting the pound. The JPY pairs, as European uncertainty grows, the yen may bring surprises. It's currently weakening. By surprises, of course, I mean that at some point it will reverse. The more European turmoil, the stronger the yen normally gets. This right now is an aberration, again, most likely caused by the fears of a trade war and the impact that would have on Japan as well as a few other countries. Last but not least, the Canadian pairs. The interest hike that we had failed to prop up the Canadian dollar. I'm keeping a close eye on the CAD pairs for quick opportunities. I would expect them to continue weakening since that was the determination that the market made. but I'll wait to see the signals playing out before I jump in either direction. And that is it, except for my parting message here. Political unrest is going to be the theme of the week. It could be your best friend or your worst enemy. Always be cautious when we're in uncertain times. Trust your technicals, especially for the long-term signals. Many times the technicals anticipate what the fundamentals are going to do. Why? Because there's always rumors floating around. So you can see that the pound started to weaken quite a while back. It didn't have to wait for the ministers to resign all in 1 week. It had already been heading in that direction. So the fundamentals often confirm or even strengthen the technicals until, of course, they don't. So trade carefully. But trade long-term more than short-term during these times. It's much easier to pick the direction long-term right now. In the short-term, it's going to be very bouncy, very choppy, very stormy. So what to do, that's what you need to do. Trusting your long-terms more than your short-term. That's my parting message for today. Anybody have any comments or questions?
Yeah, Andy, I just got a comment. I tend to agree with Diane that you would expect the yen to be strengthening now and it's not, which tells me that
Indeed, I do. Indeed, I do expect that, but it's not. You just said
exactly.
it. Carry on.
But my point is, you got a problem in Britain, and if the market becomes convinced the trade wars are real, that cross could be really powerful.
Absolutely. And I am going to be keeping a close eye. My finger is going to be on the pulse of the European crosses with the JPY, as well as the dollar crosses with certain currencies. So again, it would be very nice if we could simply take a look at the newspaper and decide our trades and jump in. But unfortunately, the market is irrational. You can see things that should strengthen a currency, like the interest rate going up. And in fact, it did the opposite. It made the Canadian dollar get weaker. So there is no telling how the market reacts. You want to trade successfully, you have to have a really good idea of what should happen, what common sense indicates should happen, but then always trade what the market is doing. Keep your opinions in your back pocket. They will be useful. Eventually, the market will start agreeing with common sense. It's going to take a while. And when that happens, you'll be very much prepared and in anticipation to take those moves to where they should have gone in the first place, but for whatever crazy reason, they didn't.
So does that mean with something like what's going on right now that it would probably be safer to trade on lower time frames?
No, quite the opposite. The lower time frames are going to be absolute chaos whenever there is uncertainty in the market. They're going to go in both directions very quickly and very widely, which means that unless you're prepared to have really wide stops, you're going to get stopped out more often than not. And if you're going to have wide stops and you're already convinced in the direction, well, trade the long term. That's exactly what long-term trading is.
But then you could rely more on the indicators, I would think, on the shorter time frames versus the longer time frames.
The indicators are always, everything is less reliable on the shorter time frame. You may disagree with that, and that's okay. I mean, give it a try. But my experience, my opinion is that the smaller the time frame, the less reliable the indicators.
No matter the type of market.
No matter the type of market.
Okay. Thanks.
Again, my opinion. I may be completely
right.
wrong, and you guys can prove me wrong, but that's my opinion.
No, you're right. The longer the time frame, the more accurate the indicator.
Experience. That's been my experience. But again, I've only been around for 25 years. So what do I know? In the market, I'm much older than 25. I should clarify that. But yeah, Diane, there are some indicators that tend to be a little bit better in the shorter time frames. But again, any time of uncertainty is going to be just horrible for everything. And by lower time frames, what exactly do you mean?
You don't even want to know.
No. I really do. Absolutely. Because that does, and I mean, somebody can say lower time frames and they mean the daily. Then I'm going to say, oh, hell yeah, you use the indicators.
Okay. I'll go ahead and say it. The 5-minute chart, if people wake up and they decide that, you know, everything's going down, it's going down and the indicators are pretty good and you can probably get like 20, 30 pips, which isn't a lot. I know it's not like you're looking for a new trend, but yeah, I find that they're pretty darn accurate. And if it's pretty volatile, then it can be volatile for a day on the 5-minute and you could still read the indicators on a short time frame like that.
Absolutely, and then that's what scalpers do. But again, you're looking for very small pip profits,
Right.
much less than I normally look for. So yeah, you're right. Indeed, I can probably give you 100% accuracy when looking for 5 pips or so. They're that easy to read on a 5-minute chart. Unfortunately, 5 pips doesn't cover my spread, so.
Right, that's, I know, I was gonna say, the spread's 3 pips, probably, so.
Yeah.
Can't do 5.
So there's a point of diminishing returns. That's the economic term for that. So yeah, I would never say that the indicators are crap or don't work or anything. They just tend to be less reliable. Can they work? Of course they can work. And especially in the situation you're painting where you have a very strong movement, yeah, everything is going to be all the way at the bottom in highly negative territory, including the indicators. So you can follow that along. My caveat to that is that when it turns, it's going to turn just as quickly, and you're not going to have time to really get out. And then trailing the stop when you're looking for 30 pips is not going to work.
Yeah, no, that's what worries me, is you're thinking it's going to go up and all of a sudden news comes out and it doesn't. And all of a sudden your stop doesn't work because it went so, you know, just like a fundamental move, and there was no real fundamental that was planned, but Trump visiting, you know, so it's just not as safe. It doesn't sound like with your stop even.
Yeah, your stop is going to work. Barring a black swan, your stop is going to work more often than not. But still, I mean, how far back are you going to trail? You're looking for 30 pips. Are you going to trail 5 pips behind?
Right.
It can go up and down 5 pips at a drop of a hat, so you're going to be taken out very quickly.
No, it's not the way I really want to trade. It's just that, I don't know. I guess what you're saying is making me really nervous.
And indeed it should. Indeed, this is a week to be nervous, but it's also a week of high opportunities if we manage to read the markets right. I'm always nervous, or I would say I'm always cautious. I never take anything for granted in the market.
Yeah. All right. Thanks.
Okay, fun stuff. Anybody have anything else for me today? Yeah, wow, we got a bunch of people I hadn't even seen who we had. Hey, Joseph, haven't seen you in a while, man.
Hey, how you doing, Andy? How are you?
Pretty good. Welcome back.
Thank you. Great to be back.
Excellent. Rick, I still owe you a couple of things. I need to set you up on the AWS. So I had a very busy weekend, but I'll get to that within the next 24 hours, probably sooner.
Okay, buddy. I was going to ask you about that, but I you know.
I figured it's on my notepad. So yep, I'm there.
Well, as long as it's on your pad, we'll get to it.
Yes, indeed, we will. And I think that's all the shout outs. Hi, Miguel. Hi, Callum. Anybody have any other questions? Okay, then thank you very much. And I will talk to you tomorrow at noon. And of course, I'll be sending out the recording of this session sometime later tonight. Happy trading, guys, and be careful out there.